and
Yes, sir. But break అవుతుంది.
వాయిస్ క్లియర్గా వాయిస్ క్లియర్గా ఉంది.
లేదు సార్, నో.
business
Okay, fine, sir. Yeah, hi friends. So let us continue the session. We were right. We were handling Ind AS 115, and we were in the middle. Correct. So let us try to complete that part. Fine. So especially in Ind AS 115, I told you already. There won't be. There won't be a question paper without Ind AS 115. So it is that important, right? And we were in what is that transaction price, determination of transaction price. That is in step number 3. We were correct. We'll complete it in maximum half an hour time. I think we will be able to close it. Then let us get into 116. That is also one important standard, wherein minimum guarantee you will get one question, right? So step number 3, I said transaction price. I just revise only to that small extent. Yeah, to what extent the entity is entitled for. Okay, it is amount of consideration it is expected to be entitled by the entity. GST, as you know, it is not our money. That's why we'll recognize it as a liability immediately. It is not revenue. Correct. The minute you receive, we have an obligation to pay it to government. That's why it is not our revenue. It is an obligation. Done. So a transaction price includes obviously the fixed amount plus any variable amount and time value of money. Yes, time value of money, that is nothing but we call deferred consideration, deferred credit, something like that we'll have a discussion on that. And next one is in case of exchange of assets. That is non-cash consideration. If it is received, then how are we supposed to determine the TP, transaction price? And the fourth one is any consideration payable to the customer. What is any consideration we pay to the customer? Yeah, we will pay to the customer. Maybe like a cash, what do you call, cash back offers, correct? Na? Or we'll give them like if you purchase one more item within 30 days or within 1 month, you will get some discount, correct? Or we'll give some gift coupon. Many kind of, many ways nowadays people are giving back to the customer. That is to attract the customer basically. That let that be whatever they want to do it, but we are supposed how to account for such things. That is what important. Okay, right. And so what is that variable consideration? Variable consideration includes your discount, refunds, and etc. Discounts, is it only quantity discount? Is it cash discount also? Even cash discount also, right? Earlier, as per accounting standards, there is no any guidance is not there, but general accounting, what were we doing? Cash discount is credited to, cash discount given is an expenditure basically for us. That's it. Cash discount given is an expenditure, but it is not reduced from the sale. But if it is trade discount, then would have reduced it from the sales, right? But here, as per Ind AS 115, trade discount, cash discount, both are going to be reduced from the sales account, right? See, practically these things, actually it is not that difficult. But theoretically, in examination, they can try to confuse us. That is very much possible. Why practically it is not, sir? It's simple. See, anybody, suppose if you are giving cash discount, yeah, anybody will give generally, like if you pay it within 10 days or within 20 days, if you give, then I'll give you discount. Correct. Generally, what are you supposed to do? Whenever cash discount is given to the customer, correct, na? Right. What do you say? You book the sale. Okay. Debtors account debited to sales, we say. Done. How much? 100, sir. Right. But when he comes back and pays me, let us say 2% discount is given, then what do you say? We'll say cash account debit. Yes, cash account debit 98. Yeah, you record cash discount only for the time being. Okay, 2 rupees to debtor account, you close it. So whatever the discount you have given, everything you book it in the cash discount account. Everything you book it in the cash discount account. Maintain one separate ledger, right? At the year end, correct? At the year end, when you are recording the sales, when you are saying revenue from operations, in grouping section, just to say cash discount also should be reduced from the sales. Next, as on 31st March, correct? Now, as on 31st March, okay, what will be their maximum March month sales? Maybe the pending, because March month sales somebody wants to pay, they will pay in the month of April. But anyhow, who will close the books in first week of April? Nobody, correct? Na? So obviously everybody, even listed companies also will be closing in the month of May and June. So by that time you will get to know how much cash discount is actually given to the customer. So that won't be a problem. Practically we'll get to know exactly how much amount is given, right? But sometime what happens, if you have given a period, not for cash discount, some other discounts, if you have given a period of longer period, like 6 months, 3 months, something like that, then estimation is something required, because you don't know how many are going to get the discount, how many are not going to get. That is when estimation is required. Hope you understand. Done. So that's what I told you yesterday. Estimation, expected value. When do you go for expected value? When you have large number of similar contracts, right? This offer is not given to one person. This is given to all the customers. This is given to all the customers, right? 1 second. Yeah, this is given to all the customers. Under that circumstance, right? I don't know who is going to take up. Then let us take up the probabilities, right? Just multiply with the probabilities. We'll get an average number, weighted average of probability, that is expected value. That expected value you are supposed to go with. Then at the same time, most likely, sir, it is not large number of situation, only one party, right? You can assess party by party, and possibility outcome is what? Yes or no. Will he be able to get the discount or not getting? Yes. Okay, how much he will get? Then accordingly will determine the amount, right? And as I told you very clearly, it is not a choice to the entity. Depending upon the situation, one has to pick this. Okay, done. And few examples we have given. Okay, first, what is volume discount? Volume discount is known to you. We'll give a target. If you purchase in the year 10,000 units, then I will give you, right? I am selling you right now at 100 rupees. I will bill you at 100 rupees. If you reach the target within this year, then I will come back retrospectively. I will sell you at 90. Means what? At 10 rupees, we will raise a credit note to the customer. Okay, whatever you are supposed to be, will reduce that, or you can use it for the future purchases. So that offer will be there, correct? No? So when there is volume discount is given to the customer, so to that extent, it is my entity is not entitled for, correct? That's why we are supposed to reduce this discount from the sales amount. It should not be showed as an expenditure. It should be reduced from the sales. Same way, price concession, rebates, these names are different. Matter is same. Okay, cash discounts, just now I spoke. Yeah, if you are expecting that, I mean, as on 31st March, if you're expecting some people may exercise this discount, I mean, they will come and pay within some time, then reduce it. You can estimate it and you can reduce it. That is what. Next, price protection. Price protection, price matching, you must have heard nowadays, like many shops, especially for mobiles, they are doing it. Price protection means, today I am purchasing this mobile for 30,000. Okay, super, sir. Right. Suppose tomorrow, I mean, I purchased it today. Within 1 week, what has happened? This value of 30,000, the same company only, same, I mean, website, say example, Amazon or anybody, any company, they are only selling it for 25,000. That means I became Bakra here. Just 1 week before I purchased for 30,000. Within 1 week, 5,000 rupees, it came down. Got it? So price protection means what here? Within the specific time, if there is any fall in the rate of the item, what is that? I mean, we are supposed to pay 5,000 rupees back to the customer. Got it? Price protection. They will give a time, but it will not be like more than 1 month. Generally, within 1 month, if there is a fall in the price, company has to repay. I mean, company has to, first I collected 30,000. Now I have to give 5,000 rupees back. Are you getting my point? Yeah. So that is, I mean, that is also kind of a payment I'm not, that means I'm entitled for only 25,000 rupees. Okay, that is one. Next, price matching. What is price matching? I am selling for 30,000 today one product. If you prove me that, I mean, say example, I booked in your website 30,000 rupees. Okay. And I got to know that after purchasing, no, I got to know that in another website, it was available for 28,000 rupees. Same item, everything is same. If the company is saying like price matching, like, I mean, generally Sangeeta mobiles and these people will have this. If you prove that, yeah, I mean, anybody is selling lesser than this price, will pay you that money back. That means I purchased it for 30,000 rupees. If you prove that it is same item is available for 28,000 in another website on the same date, getting my point? Right, I will pay you 2,000 rupees back. Who will pay? My company has to pay 2,000 back to the customer. 2,000 is supposed to be reduced from the sales, not as a discount, not as a promotional expenses, not under any head. It has to be reduced from the sales. That is as per earlier, all these kind of expenses, no, as per accounting standards, we used to book under sales promotion expenses, cash discount expense, some name we used to book. But now, as per Ind AS 115, you should not book like that. It should be reduced from the sales. Done. And barter. If barter means obviously non-cash consideration. We sold goods, they sold something else. Correct. If they have sold something else, then what are we supposed to do? Recognize it. I mean, our sales, what is our sales value, sir? We'll say, what is our sales value? Sales value is equal to fair market value of what you have received. Yeah, you received some non-cash consideration. What is the value of it? Fair value of it. Our number is going to be my sales. That number is going to be my sales. Got it? Right. So that's what we say. Measure non-cash. Yeah, look at here. Measure non-cash consideration at fair market value. Our sales is equal to fair market value of the goods received. The worst level, if you cannot measure it, that is, I mean, 99.999%, it is possible to measure. But anyhow, standard has to talk about all circumstances. That's why if you cannot measure it, then sales is equal to fair market value of goods given. Means our fair market, we gave some goods, na? That same value, generally we are selling it to other customer at what rate? That rate only we will book the sales. Getting my point? Right. Yeah, this is one more point. This is, I feel it is expected in the examination. Okay, right. Time value of money. Okay, or people call it, I mean, three names people totally can call it. One is time value of money. Next is significant financing component. Next is deferred credit period. Done. What is this? See, generally, if you are selling goods, na, we'll give maximum how much credit, how many months or days credit period. The worst level people will give even for 10 days. Okay, 3 months max to max. Under rare circumstance, you will see 6 months. But nobody will give a credit period of take goods today, you give me after 2 years, which is impossible. Agree? Obviously impossible. So that means if there is a longer credit period, deferred, it's postponed credit period, not normal. Okay, then what are we trying to say? There is interest element in the sales value. Correct? Na? See, if I say I have told in the invoice 10,000 rupees, pay me after 2 years. Correct? Na? That means 10,000 rupees is not the real value of sales. 10,000 rupees includes goods value. 10,000 includes goods value as well as interest element. Okay, then how much is interest element, sir? Very simple. Interest element, what do we say? What is the amount? 10,000 rupees. And what is the cash price of this item? Sir, if I right now I will give you the money, tell me at what rate you will sell me. Sir, right now if you give 9,000 rupees, that means obviously 1,000 rupees is interest element. Correct. So what are we supposed to do? Interest, I told you, interest wherever, whenever, interest expense, interest income, both interest expense, interest income. As per Ind AS 109, it has to be at effective rate of interest. That is IRR. Anywhere, interest expense, interest income, both. Okay. at effective rate of interest only it has to be computed. That's why what do? We will calculate IRR in this case. We'll calculate IRR in this case. We'll say 9,000 rupees at Y0. Y1 में कुछ नहीं मिलेगा. Y2 में 10,000 rupees. Correct na? This is Y1. Then you do it in Excel. IRR formula, you just follow. You will get 1%. At that percentage, you are supposed to recognize interest income because 10,000 includes sale of goods as well as interest income to the seller. You are supposed to do it. But here some small points are there which are crucial because obviously they don't ask based on this. Bit higher level they will ask. Right. Listen some important points. Yeah. Say suppose one question can come to your mind. Sir, I mean you are saying like customer will pay late. Correct na? Suppose if it is ulta. Ulta means what? Customer will give an advance. Supplier will give me the item after 2 years. Are you getting my point? Customer will give an advance. Supplier will give me, I will give that supplier, customer is giving me advance today. I will supply it to the customer after 2 years. Is there finance element? Pakka finance element. Here also. That also is supposed to be that time it is going to be interest expense to the entity. That time it is interest expense to the entity. We are supposed to recognize it in that fashion. Means how do you recognize, sir? Very simple. Yeah, today you received say 4,000 rupees. Example. Today you received 4,000 rupees. Then what do you say? You say cash account debit to advance account. You will record. Ha sir, 4,000. All right. What is the rate? Normally market mein what is the rate available? Then you calculate interest expense account debit. Interest expense account debit to advance for Y1 and Y2. You record it. Let us say total interest comes to 800 rupees. Total interest comes to 800. Just simply I'm calculating. Right. At Y2, when you sell the goods, then it will be advance account debit. Advance account has already become 4,800. Correct. Then two sales. My sales are going to be 4,800, my dear, but not 4,000. Got it? So this rule is applicable where customer will pay late or I will supply late. Right. Both the circumstances. Right. Read this line, second point. If the timing of transfer is at the discretion of the customer, I told as a supplier, goods are ready. Whenever you want, you come. But that guy came after 2 years. Then there is no interest element because it is not right. He's not funding me. Goods are already ready. You didn't come means that is your problem. Correct. Now that's why we do not recognize any interest element in this case. Right. Next important point. Right. Say IRR rate is equal to 10%. Means as per our calculation. But actually market may similar rate of contracts are. That's what we are supposed to look at market rate as well. Generally IRR. But at the same time, sometimes what happens, IRR may be, manipulated because the way they formulate it, it can be manipulated. That's why we should have a look at market rates also. Market rates of loan is coming to 14%. That means why somebody will, correct na? See, why somebody will give a loan. Example, I'm the company. I'll take a loan from somebody at 14%. I will give it to customer at 10%, which is impossible. No, I will give it to customer at more than 14%. That means if 10% is the IRR, market term is equal to 14%, you have to consider minimum 14% because nobody takes the loan at 14 and give it to other person at less than 14, which is impossible. Got it? That is point. Next, at the same time, ulta. Suppose IRR is 12%. Okay. But incremental borrowing rate is equal to 6%. Got it? IRR is 12%. Incremental borrowing rate is 6%. This is a situation where we have taken the advance. Are you getting my? We have taken the advance means we are supposed to recognize interest expense. Perfect. Okay. As per IRR calculation, it is coming 14% I am paying, 12% whatever number. But market may rate is interest rate is available to me is at 6%. Correct na? This is we can write like this is in case of advance receipt from the customer. Advance received as per IRR calculation 14% or 12% is coming. But if I go to market and take a loan, I can get it at 6%. That means Correct. Now, why will I take the loan from the customer for 14%, which is illogical? Correct. Now, because in the market it is available for 6%. Why will I take a loan for 14%, which is just impossible? That's why we are supposed to recognize it. We are supposed to consider at what percentage? 6% only. You are supposed to take it. Got it? Right. This is, I mean, other points are not that important. Next, standalone selling price, SSP, estimation methods. Okay, SSP, I mean, standalone selling price. Individually, if I sell it to one person, I mean, not to you, individually, one item, if I sell it to another person, at what rate I can sell it? That is SSP. When your transaction price, as per the contract, transaction price is equal to say 10,000. But 10,000, but there are so many performance obligations within the contract. Then what are we supposed to do? The transaction price is supposed to be allocated. Sir, how do you allocate it? The allocation should be based on SSP. Respective SSP ratio, you are supposed to allocate it. That is what. So how do you calculate SSP? There are some three, I mean, more than that, more than three are given there, but you can calculate in any another better fashion. If you find it, that also you can follow. Okay. The first one is what? The first one is adjusted market price. We are not selling. Suppose same item we are selling, then there is no discussion. Right? We can pick it, that number. Suppose I am not selling, sir. Then you can estimate it. How can I estimate? If I sell it individually, at what rate I would have sold it? Okay, I am not selling. Okay, then take it from the market price. But when you take it from the market price, you need not fix the same price actually. You need not fix the same price. Why you did not? I mean, we need not fix the same price. Only one reason. See, we don't know what is the other person quality. Correct. We may maintain better quality, or we may maintain lower quality. Correct. Now, product may be at higher level, lower level. That's why you can do plus or minus adjustment to it. And the rest number only will say, if I had sold, I would have sold at this rate. Okay. That is how you should calculate it. The next method is expected cost plus appropriate. Correct. Now, okay. If I make it, what would be the cost of the item plus, and how much do I charge in general? Like that also you can take it. And the last one, residual approach. Yeah, but residual approach every time you cannot follow, only under circumstance. Which circumstance? Yeah, suppose in the contract there is, right, to say one A, B, C are the performance obligations. These two informations, observable prices are available. These observable prices are available for except one item. For all other things you have it. Then for this I can follow residual approach. Right, sir, I don't know for A, I don't know for B. Two items I don't know. Then you cannot follow residual approach. I hope you understood this point. Okay, right. At the same time, we can apply combination and etc. Next, allocation of discount. Let me close it in simple fashion. Suppose say A, B, C are three products are there. Okay. Individually, let us say 100 rupees, sir. Individually, let us say 150 rupees, 200 rupees. These are the individual selling prices, observable prices. Okay. Right. Total coming to how much? 450. Done. But we sold all three together is equal to for 400 rupees. Done. That means we gave in total, we gave a discount of 50. Right. If we don't say anything, E400 will be allocated in the ratio of, correct, in the ratio of 100 is to 150 is to 200. Done. But suppose example, the same seller, B and C together, how much it cost? Actually 350. Sir, B and C together also, sir, this guy sells at 300. You understood my point? B and C, if some customer comes and purchases, we have to collect 350, but no, we'll collect 300. That means E50 rupees of discount is purely pertaining to B and C, but not to A. Getting my point? That means A sale should be recognized at 100. A sale should be recognized at 100. Are you getting my point? Out of 400 rupees, A sale is equal to 100. What about B sale? B and C is equal to total 300. E300 should be allocated in the ratio of 150:200 proportion में कर दो. Whenever you hand over B, accordingly you are supposed, our ratio amount you are supposed to take it into sales. Okay, right. That is, you should, if it is visible, if it is observable, generally we'll give it to B and C. If anybody purchases, will give a discount, means we are supposed to do like that, right? If you don't do, then what will happen? If 50 will be 50 discount will be allocated to ABC actually, which is illogical and incorrect. Got it? That is the point. Next, topic number 4, I mean within. Okay, what is that? Consideration payable to customer loyalty program. Loyalty program. This is what very important. Examination may, I mean, not yet asked, but there is a chance of, obviously from this there is a chance always, right? What is it? See, I'll tell you. See, we are the sellers. Yeah, we are the sellers, and there is a customer. Correct. See, we sold goods to him. Done. Okay, we sold for 10,000 rupees goods. We sold. Super. But customer also sold something. Correct. Customer also sold something. For that we paid, let us say, some 2,000 rupees we paid. Yeah, simple question. We paid to customer. Yeah, when you say we paid to customer, first question we should ask, why did you pay? No, we bought goods, sir. We bought goods or services. Then fine. Next question. Yeah, what is the fair value of the goods? You should ask. What is the fair market value of the goods? Sir, fair market value of the goods is 1,800. But how much you paid, Ray? I paid 2,000, sir. That means E200 is nothing. E200, what are you supposed to do? Excess paid. Why excess paid? Because he gave an order to me, na? That's why I paid 200 extra. R200, you are supposed to reduce it from 10,000. That means sales supposed to be recognized at 9,800 rupees only. Sales should be recognized at 9,800 rupees only. Are you getting my point? Right. What I say, we paid to customer. Reason for what? Sir, because he sold goods or services. Done. How much you paid? 2,000. But what is the fair value of the goods? What he sold me? 1,800. Then R200 should be reduced from 10,000. No, sir, it is 2,000, 2,000 only. Like nothing excess paid. Nothing excess paid means sales will be recognized at 10,000 only. E1800 rupees will be my purchases. 1,800 will be recognized as purchases. 200 will be reduced from the sales. Got my point? It like journal entry is what? Purchases account debit 1,800, sales account debit 200 to cash. Like that we will be recording. But when you must have already recognized 10,000 rupees sales, net effect will come to 9,800. That is the problem. Okay, right. Next issue is what? So we paid money to customer. Why did you pay? Has he sold any goods? Nothing he sold. Then directly cut it from 10,000. Simply, I mean, there is no identified goods or services as such. Then does not matter. 10,000 minus whatever the amount you paid, you are supposed to reduce it from the selling prices. Getting my point? This is one important situation. Okay, same thing I have explained here. Yeah, allocation of transaction to, this is what SSP is observable. Same thing. Allocation of, okay, allocation of variable consideration. Sometime what happens? Okay, yeah, listen carefully. There are say one purchase, I mean performance obligation number 1, performance obligation number 2 may be there. Okay, this may be a fixed consideration for this, and there will be variable consideration. There will be variable consideration for the performance obligation number 2. Okay, done. Now see, if it is the fact, okay, why are you fixing variable consideration? No, sir, the services are like that. That's why variable consideration. If you specifically identify, then there is no problem. Then there is no problem. Whatever the variable consideration we are discussing, that will be allocated to only this performance obligation. Sometimes what people can try to modify, alter, no, right? Say example, performance obligation 1, I said fixed. This value, fair value is equal to generally 1,000. But what he says, no, he will say only 800 rupees fixed karke he will tell. Done. With respect to performance obligation 2, where I said it is variable, fair market value is equal to, let us say, 1,000, but E200 is there, na? right? We will say 1200. 1200 means it is estimated. It is estimated means I say instead of 1000, let us say 3% should be generally given. Got it? All right. But what this guy will do, not 3%, we'll say 4%. Why is he doing 4%? Because he is giving less money for the performance obligation. To compensate it, he will give, correct na, he will say in the agreement 4% is given for performance obligation too. It is obviously compensation. Why will say when I have an item for 1000, why will I sell it to other person for 800? I don't. That means I am selling means I must be getting compensated in some other fashion. So how are they compensating? They are compensating me through another purchase. What is that? Performance obligation, where generally I should get 3%, is giving 4%. Our difference of 1% comes to 200 in rupees. So that means he's trying to cheat us here. In under that circumstance, what do? We don't account it, right? We don't account separately. This is 800, this is 1200. We don't take it. Under that circumstance, we'll say I don't consider all these things. Totally how much here? Total is equal to 2000, sir. 1200 plus 800. E200 related to E200, E2000 is related to performance obligation 1 and 2. That's it. Performance obligation 1 and 2, I will say. Getting my point? Total 2000 is related to both. I will allocate it. Right. And as per the fair values, we will allocate it, not as mentioned in the contract, because sometimes contract, they will try to cheat us in different fashion. We don't consider if it is not at fair value. Now 2000 is related to what? Performance obligation 1 as well as performance obligation number 2. Okay, done. Suppose if first one only we gave an item to other party, okay, then what is the fair value of it? 1000. We'll book the 1000 rupees. Sir, but he must have given 800 only. Correct. I will say, right, cash account debit 800. We delivered first item. Okay, delivered first item means sales should be booked, right? But actual sales should be how much? 1000. But as per the agreement, he will give only how much? 800. But our remaining 200 he will give me pakka when I sell next item. That's why what do you say? Debtors account to debit 200. Then you recognize the sales for 1000 rupees. Like this. Done. When you sell, next item, when you sell it, what do you receive actually? We'll receive cash account debit how much? 1200. Correct. That time, what do I say? Sales is equal to 1000, I will record. To debtors, I will record 200. Got my point? Even though he tried to manipulate it, we will record with respect to performance obligation 1. Exactly, it is supposed to be 1000. So 1000 only should be allocated. Hope you understand. But for this actually bigger sum, if we do, you will get better idea that we cannot actually do it. That much time is not available to us. Chalo. And foremost important, out of all the things, this is generally practically the problems will come from this step. Okay, right. Say a simple example, I'll tell. Suppose somebody is constructing an apartment. Okay, so many houses, something like that, they are constructing. Yeah, he's a builder. Then how will he recognize the revenue from this? Right. Can he recognize, suppose building percentage completions are already 60% of the building is constructed. Okay. Say 50% of the advance money received from the customer also. Getting my point? 60 lakh I spent. The 60 crores I spent, 50 crore I got it from the customers as advance. Can you people try to what extent I should recognize revenue? To what extent I can recognize revenue? Can you try? I repeat, 60% of building construction is over. Okay, 100% if I complete, I will get, let us say 120 crore rupees will come. If I complete 100%, 120 crore will come. But so far, advance collected from the customers is equal to, getting my point, 50% only collected. Someone says 30 crore. Others, nothing. Don't recognize only. Better option. Right. Let me answer. Right. Simple, my dear. E50 crore, first of all, the point is to say that shall we recognize or not, first we should answer the step number 5. What is in step number 5? Step number 5 may, right, so that year revenue only. Okay, done. Listen, please. Shall we recognize this revenue at a point in time, over time? That first we are supposed to fix it. Now, first point in time means what? Only at one point of time. Just, I mean, control is transferred to other party. That time only we can book the sales. Otherwise, you can't book the sales. That's it. I mean, not based on the percentage of completion. Last day when you get the, when you transfer means registration is done in the name of the customer. That day we can say sales are over. But till the completion, no, we cannot. When you fall under this category, right? If it is percentage completion, that is called overtime. Okay. But if you want to, is it under overtime? Is it under point in time? For that, what are we supposed to do? Yeah, for overtime, if you want, if you want to recognize under overtime, you are supposed to satisfy any one of the conditions out of 3. Okay, what is the first one? First one, what we say, customer should be getting the benefits, consuming the benefits simultaneously. Yeah, try to link it. With respect to this building, customer, it is under construction. Customer is not getting any benefit. Correct. Customer is at his home. That's all. Because building is under construction, how can I get the benefit? I can't get benefit. So first condition, not satisfied. Not a problem. Second one, you have to check. Performance creates and enhances an asset to the customer, which is under the control of the customer. Okay. See, builder is constructing in his site. Yeah, it is an apartment. He's constructing in his site. He's not constructing in my site. So customer does not have control over the asset. Correct. The customer does not have control over the asset. So that means second condition also not satisfied. Then we are left with only the third condition. If you satisfy, then only percentage based recognition. Otherwise, no revenue recognition till registration is completed. Got my point? Third one. What is the third one, sir? Performance does not create an asset with alternative use. And second point also you have to satisfy. That means what? You are creating an asset that can be used only by the customer. And if customer, that can be used by only by the customer. If customer say no, I cannot sell it to anybody else because it doesn't have an alternative use. Getting my point? Now come to the point. Which points are? With respect to apartment construction, if Mr. A booked the flat, if he says, sir, I don't want to buy, okay, what will happen? Nothing will happen. If A is not there, we'll find B. We'll find B and we'll sell it to B. Got it? Hope you understand. If A is not buying, we will sell it to B. Right. That means apartment mein houses is not, it has alternative use. It has alternative use. If not A, we can sell it to B. That means this apartment concept, no, it will not satisfy none of the conditions. That means what should I record? You should only follow point in time. You should follow only point in time. Point in time means exactly what, sir? Till the date registration is done in the name of the customer, control is not transferred to the customer. Till that time, you cannot book the sales. That means builder is, sir, he constructed for 3 years mein construction kiya. All these 3 years you do, my dear, right? In the balance sheet mein, what will happen? First of all, sales will be 0 all the 3 years. Sales is equal to 0. No sales at all. Nothing, not 30 crores or 60 crores or 50 crores. 0 sales. Then, sir, we spent so much money, na? Right? That will be under the head inventory work in progress. May you have to write. You spend 60 crores. I told na, 60 crore will be recorded. Customer se advance aa gaya na, sir? Yes. Customer se advance aa gaya. Advance is equal to 50 crore. It will be like that. Here 60 crore, here 50 crore. But what will be there? 0 sales. Okay, sir. At Y3, sir. On the Y3, Now we started transferring it to registering in the name of the customer. Okay, that time what do you do? That time what do you do? E-inventory will become consumption in the profit and loss. This is a profit and loss. Consumption will be booked. E-work in progress will be booked proportionately. Correct, sir? All are sold in the current year only. Okay, no problem. Whatever you spent money, full will come, which was in inventory, will come to consumption. And whatever advance is there, that will become sales. That will become sales. In addition to the advance, they will give some more money, at the time of registration. That also will be part and parcel of sales. Got it? Right. So that's why I told you E conditions are very crucial. Very, very crucial. If you do not satisfy any one of them, only one you should satisfy sufficient. If you do not satisfy any one of them, you can recognize only at point in time, but not on percentage completion basis. Okay, na? Right. Sir, how do you calculate percentage? Yeah, based on this also one time question was asked. Fine, right. See, there are two methods. One is output method, and there is next one is input method. Priority, first priority generally will be given to output. If you feel that it is not making sense to us, then only we are supposed to go with second priority. Output method means what? Simple example, surveyor method means surveyor means, expert will come to our site. He will check how much he will decide what percentage of work is completed. He will give a certification. Engineer basically. This man will give you a certification. Okay, he says 62.5% is done. That's all. 60 over the total revenue, 62.5% I will book it. That's all. Done. Next, this method, input method, is nothing but cost method. What is cost method? Cost method means cost incurred till date. It is written very clearly. Cost incurred till date divided by total cost. Yeah, say 60 rupees I have spent totally. Out of 100 rupees, 60 rupees so far I spent. That means you have completed 60%. Total revenue is equal to say 1000 rupees. Say 150 rupees is total revenue. Then your sales so far is equal to 150 into 60%. Percentage completion only when you are falling under overtime. When you are falling under overtime, this concept of percentage completion will be applicable. And one important point they asked is, in the, I think 1 or 2 attempts before, what they asked, what is that? Escalator example. Okay, na? Escalator. Yeah, what they said, escalator value is equal to 50 lakh rupees. Done. Escalator, they just brought it to the site. Whose site? Customer site, they just brought it. That's it. Nothing is done with respect to escalator. Just brought it and kept. Okay, 50 lakh worth of escalator, they brought it, they kept it. Then what should I do? What should you do? No, in the profit and loss, escalator related sales will record it. How much, sir? Escalator sales, I will say 50 lakh. Okay, cost also I will say 50 lakh. Because with respect to escalator, you didn't do any job. So on that job, you are not supposed to recognize any gross profit. Are you getting my point? This is called, the practice may, what you will call uninstalled inventory, something like that we call. Okay, it is, what do we call? Uninstalled inventory. Inventory is at the site of the customer site, it is there. It will be used only for the customer. We don't take it back. Getting my point? All right. So practically we have to look into, which item will be used here, which item they can take it back. We have to consider. To that item, you recognize the sales at cost. If it is uninstalled, work is not started, no job is done, then sales is going to be cost money. So GP is going to be 0. Gross profit from that item is going to be 0. That's it. Okay, that is one. Based on this small concept, they asked some 6 marks question. Okay, that's why you have to be careful with respect to that item, right? And recently, bill and hold consignment and all. Okay, bill and hold I can explain you. Somewhat important. Bill and hold means we raised the bill, invoice is raised already. Okay, but we have not sold but physically goods are lying at our place. We raised the invoice, but physically goods are lying at our place. But still I can recognize the revenue subject to condition. Which condition? They have given 4 conditions. First, What is the reason? Reason must be substantive. Means customer, at the request of the customer, sir, I have not delivered the goods. Otherwise, goods are ready. I would have done that job. Second one. Goods are identified and ready for physical transfer. Yeah, everything is ready. Customer only last minute mein customer said, sir, don't send it. I need it later. Please keep it with you. He requested. At his request, I stopped what is the transportation? Otherwise, I would have sent it. That is important. Next thing, what do I say? Na? Entity cannot redirect it to any other customer. This is crucial. Okay. Goods are with me. Okay. Anyhow, the customer is Mr. A. He's saying, I don't want right now. Okay, fine. Now, if the seller says, this B wanted, no, E goods, you give it to B, then I cannot recognize the sales. When can I recognize the sales? These goods are only with respect to only A. I cannot give these goods to any other customer. If you can prove that, that time you recognize the sale. Because seller is saying, I cannot sell it to another person. You cannot sell it to another person means what? Control is already transferred to the customer. If I say I can transfer it, if not to A, B ko I can transfer kar sakta. That means control is with me. When control is with me, how can I recognize the sale? That's all. That is the last point is what? Crucial point actually. That is a crucial point. That rest of the things, rest of the things, this is also an important concept generally. Okay, sale with a right to return. Okay, means what? I sold, say example, 1,000 goods I sold. 1,000 units I sold. At what rates are 100? But out of this, sir, I'm expecting 100 units may come back. 100 units may come back because the customer has a right to return the same product to me within 1 month. Say example. Under that circumstance, your sales are going to be how much? Only 900 units sales only you record it. 100 I'm expecting that it will come back. Fine, no problem. Recognize the sales for 900, but money you sold goods means money you must have received for 1,000 goods. 1,000 goods you received means what is the point here? We'll say cash, account debit. Okay, 1,000 units money, but correct. Sales is equal to 900 units money, but it is an obligation. We'll say liability is equal to 100 units money. Done. I have an obligation to pay back to the customer, but under the given circumstance, you say sales are not booked, but inventory of 100 units must be with you only, na? Yeah, physically maybe with the customer, but we have right on it. That's why what do we say? 100 units stock is going to be recognized in our books. Stock you recognize it because you didn't book the. Why are you recognizing, sir? Because on 31st March, whoever goes for physical stock, they will not find this 100 units. Correct. Na? So automatically it will not be counted. It will not come into my stock valuation. That's why E100 is supposed to be recognized separately. Separate journal entry is supposed, journal voucher you are supposed to raise, then recognize with respect to 100 units at cost. Obviously, inventory will be at cost or NRV, whichever is lower. Same rule is supposed to be followed. That is one crucial point, right? Actually, in accounting standard 9, no guidance and nothing. It was very simple standard. 115 is very big standard and beautiful and difficult, right? All are there in that, but they have given as much as possible. What is that? Guidance is given. Next. Yeah, based on this, I say this point, let me say and let me close 115. Try to understand. There is principal versus agent. Okay, principal versus agent. Based on this question, my dear, they have asked in the last attempt, I think, if I believe. Okay, 6 marks question they have asked. Got it? Okay, 6 marks question has come from this principal versus agent. Yeah, that is that important. To decide why, what is the problem, sir? What is the problem means, if you say I am the principal, I will be recording the real sales. In my profit and loss, I will say sales. Correct. If you say I am an agent, then I should, what is my sales? Agent sales are is equal to, basically it must be a commission. Correct. He must have received to his hand 1,000, but he has to pay to the principal 950. Okay, na? Right. E50 will be sales to the agent. E950 will be the sales to, correct, not 950. Actually, he will be recording 1000 will be recorded as what? Sales to, I mean, principal will be recording. Principal will be recording as a sales, and E50 rupees will be his expenditure as a commission expense. We will book it. Hope you understand, right? That's what you say. Principal will be recording at gross recognition, wherein agent will be recording at net, because what comes to him. So that's why it is crucial to decide who is that our seller is he really principal, or is he the agent? They have given some indicators for agent. Okay, who is the agent, how to identify? They have given indicators, but it is not exhaustive. I mean, we have to apply our own knowledge, and accordingly we have to consider. Look at agent indications are given, right? Let's read. Right, another party principally responsible to fulfill the promise. Correct. Suppose the agent is booking one flight ticket for me from Indigo flight. Principal is Indigo, because who has to provide the services to the customer? Indigo has to do the services. Agent will not do anything. Agent will just give you a ticket. That's it. So that means that's what another party principally. I mean, another party means the Indigo has to provide the services. There is no risk of inventory. No risk of inventory to the principal. Okay, no direction. I mean, no direction, or what is that on the fixing? I mean, you cannot fix. Who cannot fix? Fixing will be done by the principal. Principal will fix the price, not the agent, right? Consideration for the agent is going to be only commission, and we are not exposed. Who are not exposed? Agent is not exposed to any credit risk. Suppose customer does not pay, agent will not cry. Principal only has to cry. Getting my point? Under that circumstance, we will say, sir, I don't have any risk. Then you are agent. Principal is someone else. Right, based on these 4-5 lines, if you remember these 5 lines, that would be more than sufficient. I mean, if you write this, see, in the examination, generally students, based on experience, I am saying, they will write, I mean, standard related information, they will write very little actually, hardly anything. Okay, 1-2 lines, they'll just close it, and they will have a lot of discussion. See, any day, if your discussion substantiating based on the standard, then there will be some marks for you, right? That's why we give always the first paragraph must be based on the standard. Ind AS 115 says, as per Ind AS 115, agent and principal, okay, the bifurcation or identification based on the following indicators: 1, 2, 3, 4, 5. In the given case, he's an, I mean, here the person does not have risk, reward, and etc. You write it, then you conclude it, you will get full mark. Okay, otherwise it is not possible to get full mark, even though your answer is correct. Yeah, you said you concluded he's agent only, but you won't, out of 4 won't come. Maybe somewhere 2 or 2.5 something you will get. That is general problem in presentation. I know it is difficult to remember a lot, but you don't have a choice. That's why you have to, I mean, last minute, if you are studying, it's going to be difficult. It is going to be difficult to remember so much. Okay, this point is important. I mean, 2-3 points only, specific points may I have discussed. Fine. To that extent, if you remember, it will be sufficient. Done. Chalo. Next chapter, I mean, let us spend some time with respect to Ind AS 116. Okay. Ind AS 116, see, from the lessee point of view, from the lessee here, major difference between accounting standard 19 versus Ind AS 116. If I say, the difference is, yeah, from lessor point of view, what is there here? It is same. Correct. Lessor is going to classify the lease into finance lease and operating lease. It's exactly same. But with respect to lessee point of view, it is not same. It is obviously entirely it is different. Right. What is that? Lessee, correct? If he is lessee, fine. There is no classification. First of all, there is no classification. We do not classify any lease. right? For any kind of lease, we will record one item, ROUA. What is ROUA? Sir, Ind AS 19 or 17? No, AS 19 I said. This is accounting standard 19. Okay, now Ind AS 17 is not there. Ind AS 17 is already withdrawn. Ind AS 116 has come in that place. Okay, I'm just comparing with accounting standard 19, Indian standard. Okay, na? Done. So no classification. I mean, as per lessee books point of view, no classification. Any kind of lease, ROUA account debited to lease obligation, and if you have already paid some money, that money will come. That's it. Okay. What is lease obligation? Yeah, the point is, first step one, we are supposed to always calculate lease obligation, right? Second only, next step two is going to come here. Then lease obligation, no? Lease obligation, what do I say? It is a monetary item. What do you mean by monetary item? Which is payable in cash, which is payable in terms of money, correct? Cash me. If it is any non-cash consideration, no, that will not be part and parcel. Okay, right. Lease obligation mein what all will come, sir? If you have any fixed payments, correct, per month I am supposed to pay, or per annum supposed to pay, that will be payable, which will be payable. Lease obligation means future payable, that will come. At the same time, if there are any variable consideration, okay, variable consideration, what do they say? Variable consideration, this is with respect to any rate or index, with respect to rate or index. Okay, suppose, sir, it is with respect to sales. If your sales goes up, if my sales goes up, then I have to pay more money. That kind of lease payments are not part and parcel of lease obligation. Okay, right. At the same time, okay, any variable consideration also you are supposed to consider. And GRV, correct? GRV, but not generally GRV. GRV, which is payable in cash, is supposed to be taken. Okay, means GRV in cash. Yes, GRV means gross residual value, correct. See, say example, GRV is promised, 3 lakh rupees is promised. Gross residual, I mean, what is that? Guaranteed residual value, guaranteed residual value, we have fixed 3 lakh. Means when lessee returns the asset to the lessor, the value of the asset must be 3 lakh. Okay, suppose when we return it, sir, if it is 2 lakh only it has come, then for the difference of 1 lakh, lessee has to pay 1 lakh rupees of cash, 1 lakh rupees of cash to the lessor. So in my calculation, GRV payable in cash is equal to 1 lakh only will be considered, but not entire 3 lakh. Why, sir? Means E2 lakh is nothing but non-cash consideration. Correct, na? It is non-cash. LO should be only monetary, money payable, but not the other way around. Okay, then what should I do? Yeah, all these things. Plus one more thing. What is that one more thing? If there is an offer price to purchase. Yeah, offer price to purchase means what? Lessor has given me an offer. At the end of the 5 years of lease, if you are interested, purchase it. Yeah, you take it. At what rate, sir? It's already fixed. 1 lakh you pay and take it. Yeah, that's all. Okay. And if you expect that it is very much reasonable, okay, and it is reasonably, it is going to be exercised if you feel, means customer lessee is going to take it up, then 1 lakh, I mean, when he is going to take it up, then 1 lakh will become liable to pay. That's why E number also supposed to be considered. What should we do? All these numbers are supposed to be discounted for, because these are all going to be future discounted. At what rates are? First priority, the first priority IRR of lease you are supposed to consider. You have to supposed to consider what? IRR of lease. And second priority, if first one is, I mean, sir, I don't know what is the, I mean, generally student will have doubt. IRR full form is what? Internal rate of return. Return is from whose point of view? Return is always from the point of view of lessor. Correct. It is cost to lessee. So IRR cannot be computed from lessee point of view. IRR is always from lessor point of view. Got it? IRR is always from lessor point of view. Sir, how do I know what is the return for lessor? May not be possible to you to get. Correct now, because what is the return for him, I may not know it, sir. That's why they gave a second choice. What is the second choice? Lessee's incremental borrowing rate is the rate they have given. What is they have given? Lessee's incremental borrowing rate. What is this incremental? Means lessee, being a lessee, if I go to a banker afresh asking for an additional loan, I may be having already loans at 10%. Today, if I go to a banker, okay, on the date of inception, today I'm entering into the lease agreement. Today, if I go to the banker for a loan, so today he will offer me 8% only. Then 8% you should take, not the existing loans, not the old loans. An additional loan you can get at what rate? R rate only supposed to be taken. Getting my point? So, I mean, first one you should try IRR of the lease. If it is possible, take it up. If that is not possible, then go with lessee's incremental borrowing rate. You should take it. Using that rate you are supposed to multiply. I mean, this present value calculation, you should do it. Whatever the number, present value number will come, that is going to be your LO, lease obligation. Okay, right. Sir, I already given day one only advance, some cash is given. Okay, that cash also you are supposed to consider. The total number, this is going to be just a balancing figure. ROUA, we don't need to do extra job. Just ROUA is going to be almost balancing figure. But sometime what happens, there may be a provision for, okay, provision for what, sir? Provision for decommissioning is also possible. Okay, what is the provision for decommissioning? I gave you one site. Okay, this site may, okay, say example, it is a 20 years lease. Excellent. In 20 years may I constructed one flat and something like that I constructed. What agreement is telling? Agreement is telling, okay, agreement is saying, what is that? Today you construct whatever you want, but at the end of the 20 years, you have to clean this. You have to demolish the building constructed and give me the plain land. How I gave you the land, in the same fashion I want it. Correct. That means lessee has got an obligation to remove it. Correct. So, e provision for decommissioning, this is dealt by Ind AS 37. Ind AS 37 may also we discussed. I mean, you must have learned you should make a provision for decommissioning. Even that amount also is going to be part and parcel of ROUA. ROUA may it will be part and parcel. Next. Generally, some students, okay, right. Is this lease? Okay, right. Is this lease? One question to you, all of you. Try answering. Suppose there is 5 years agreement. 5 years agreement. It can be cancelled with 2 months notice. Agreement में क्या mention किया? 5 years करके mention किया. If lessee doesn't want it, what lessee can do? 2 months prior notice दे दो and cancel the lease. Now, for this agreement, whether Ind AS 116 is applicable or not, are we supposed to follow 116 or not required? Got it? There is a lease of 5 years lease agreement. In the agreement, it mentioned 2 months prior notice there though, and you can cancel. Lessee also can cancel, lessor also can cancel. Okay, right. Either 116 is applicable for this kind of lease or not. Others can try. Okay, right. The answer is no. Ind AS 116, if it is cancelled, it is like 2 months notice means it can be cancelled at any point of time by giving 2 months notice. That's what we're saying. Ind AS 116 is applicable only for the non-cancelable period. First non-cancelable. Suppose agreement में क्या हो गया? 10 years period, sir. In this 10 years period में 5 years are non-cancelable. Nobody can cancel it. Next 5 years you can cancel it. Now, first you should say 5 years plus another 5 years is there. Another 5 years can be taken if it is reasonably certain that they won't cancel it. I mean, right. Otherwise, you don't need to take this period. Got my point, right? But in my example of 5 years, no, anybody can cancel anytime. Then in days 116 only not applicable. You don't need to record ROUA account debit to LO, and lessor also doesn't need to classify it as operating lease or financing. A concept not at all relevant. Then how do they record it? Very simple. 1 month over, how much is the rent accrued? Right. Lessee will recognize as an expenditure. Lessor will recognize as an income. That's it. I mean, month on month accrual basis, accounting will take place, but not right. You don't need to calculate present value, future value, nothing. No value is necessary. If it is a cancelable lease agreement, cancelable means cancelable with prior notice, then you don't need to follow Ind AS 116 strictly. Not at all necessary. No, it's not. I mean, actually, you will not get into, because it's not. It is not under the scope. First of all, okay, right. Right. Let me see one more. Yeah, this is one more crucial point which can be. Yes, anytime cancelable means you should not consider at all. Done. Right. Yeah, this is one more important point within 116. What is it? Listen, I mean, practically we have seen this kind of situations in many companies. As per Indian GAAP, it was not specific. That's why we never followed. But as per IFRS, it is very specific. We must follow this. What is it? What is it means? Listen, I'll try to I'll try to say one small example, then you may catch it better. Say example, my dear. Britannia company is there. Okay, Britannia is for biscuits, you know. Correct. So what do they do? Na? They'll also enter into such kind of business. Okay, na? What do they say? There will be one biscuit factory is already available. Okay, biscuit factory is there. Okay, done. What do I mean? The Britannia company will approach the owners of the biscuit factory, and they will say, what they will say? Arey, we will give you what, how the biscuit is supposed to be. Getting my point, right? You should produce, let us say 120 crore biscuit packets, and you have to give it to me. Then 20 crore biscuit packets, you have to give it to me. Now the question comes to you is what? Is it sale of goods agreement? Is it a lease agreement? First question should come. It is possible in one agreement, both can be included. Okay, both can be included. How, sir? Listen carefully. Suppose, I mean, when can it be a lease? I'll tell you. Suppose in this factory, whatever is produced, okay, I mean, owner cannot use this factory other than for my Britannia biscuits. Got it? Owner cannot use this factory for other than Britannia company purpose. I mean, he cannot produce some other way. Next, who is actually controlling? I mean, when to switch on, when to switch off, in the sense when the production should start. What is the design of the biscuit, quality of the biscuit? Suppose everything is under control of the Britannia. That means what? Suppose the 20 crore products is going to happen within 2 years. It is going to happen. Example. That means it is like a factory is given to Britannia on lease for 2 years, strictly speaking. Because what are you doing as a owner, my dear? Nothing. Because can you use your factory for, I mean, making some other company biscuits? No, I cannot. Because it is under control. I mean, these 2 years, it is under control of Britannia. Okay. Can you decide when to operate, when to stop, when to, I mean, you understood? No, nothing I can do, sir. That means simply you actually gave the factory as a lease to the Britannia company. That's why we always say, and once you clear, you are supposed to read the terms and conditions, agreement terms and conditions very carefully, whether it is lease or sale of goods. Okay, right? Like this, many situations we have seen practically. Got it? I mean, that's why our terms and conditions. End of the day, what are the terms and conditions they have given? They have written in that is important. Yeah. So how to decide this? The standard has given some. I mean, one kind of what is that? Flowchart kind of thing. It's provided. Based on this, we have to conclude it. Yeah. Listen. What does it says? Identification of a lease within the contract. Do we have a agreement? I mean, lease contract within? right? For that, what do we say first? Right, we have to identify from the inception of the contract. Day one only you are supposed to think. Done. And you can reassess it. Maybe, sir, first day I tried, nothing is there. Okay, then when should I try? If there is a change in the agreement, that day you are supposed to. If there is a lease modification, agreement modification ho gaya, so that day again you have to assess it. Sir, agreement is not modified in the period, then nothing to assess. No reassessing concept. Now listen carefully. Okay, what is the procedure? First, is there an identifiable asset? Got it my point? Identifiable asset means what? Britannia is saying, Array, all my biscuits should come from only factory 1. Getting my point? Maybe the owner has factory 1, 2, 3. Getting my point? If the agreement made is mentioned, all my goods should come from only factory 1. That means first condition satisfied. Right. Suppose Britannia says, Array, whether you use it factory 1 na, factory 2 na, factory 3 na, it doesn't matter to me. Get me 20 crore biscuits. Got my point? Under this circumstance, it is sale of goods. Correct? Na? That means Britannia does not have control over any specific asset. See, when I say lease means first asset, there must be one asset should be given for lease. No. If asset only not identified, then how can I say lease? I cannot. That's why first, what is the question we ask? Is there identify asset? Yes, there is. Then we look at. The minute if you say no, na, then I will say it does not contain lease. Directly will go down. Now, next, sir, there is a specific factory like the sir. Okay, done. Does the customer have right to obtain substantially all the economic benefits in the period? I told you, Britannia, whatever the number of biscuits manufactured from factory 1, all that should be sold to Britannia, or at least 90% of it should be sold to substantially. 90% is substantially, I can say. So 90% of the goods manufactured, goods produced in factory 1 should be given to Britannia. Means these 2 years time, the economic benefits are derived by Britannia. Correct? Na? Using the factory, benefits are coming to Britannia only. Yes, then I say yes. Next, who has right to direct how, for what purpose the asset is supposed to be used? Correct? Na? Who is using exactly? I said Britannia only will decide everything from top to bottom. Britannia only, correct? Now owner will be just keeping quiet. Then I say, correct? Na? The minute you say it is by the customer, here we have trade customer, then it is obviously, it is lease is included. It is lease. It is not sale of goods. It is not sale of goods. Getting na? Means what? Whatever the amount Britannia gives to the other party, amount includes bit of, what is that? Amount includes raw material cost plus lease rentals also is there. But that level, don't need to be worried. How to account is not, we do account obviously, correct? But that level deep, not required at final level also, they are not bothered. Okay, right? You will learn it when you come into practice. Okay, right? But just try to understand. Some contracts may, it looks it is a sale of goods. It looks it is sale of goods, but it is not exactly sale of goods. It has, what is that? Lease is possible. Lease is possible. Okay, next, recognition and what is that? Recognition and measurement, not recognition measurement of the books lessee, I told you. Correct? Na? ROUA, lease and etc. etc. Right. Let me, this concept I will say another way around. Yeah, when in the books of lessor, let me handle. Same thing. I told you lease obligation includes what? Fixed payment, variable payment, guaranteed lease value. Correct? Na? These are all already discussed some time before. Yeah, ROUA is nothing but a kind of balancing figure. Okay, right. Let me take you through one concept here. Modification also not important. Just a second. Yeah, in the books of lessor. Yeah, in the books of lessor, what are we supposed to do? In the books of lessor, every lease is supposed to be classified. Lease is supposed to be classified. Classified into what, sir? You should classify it either a finance lease or operating lease. Either a finance lease or operating lease. Just a second. 1 second. Give me 2 minutes. Yeah, sorry. Yeah, lease is going to be classified into finance lease or operating lease. Okay, right. That is exactly same as your accounting standard 19 May what you studied at IPCC level. Right. When the risks and rewards related to ownership are lying with lessee, then we'll say it is a finance lease. When risks and rewards with respect to ownership is with lessor, then we say operating lease. Yeah, here one small point is with respect to if it is operating lease, we will do SLM accounting, that is straight lining the lease rentals. Okay, sometime agreement they may mention it like this, say year 1, year 2, year 3. Okay, year 1 may the zero rentals, don't need to pay anything. Okay, that is just to fool the other party. Users of financial statement, not the lessee lessor. But second year you have to pay 4 lakh rupees. Third year you are supposed to pay, let us say 9 lakh rupees, something like that. Somebody has given zero rentals means that monies must have been compensated in the next year, pakka. Correct. And again, the important point here, E3, I cannot use it for 1 year and I cannot jump. Correct. I cannot cancel. Why? It is non-cancelable first. That means we know very clearly this guy has to pay 4 lakh in the next year and 9 lakh in the next year. Got it? Right. So then under that circumstance, what are we supposed to do? 4 plus 9 is equal to the 13 lakh. Let me make it 8. Okay. 8 if I make it, it is going to be 12 lakh. Right. 12 lakh divided by 3 years. Yeah. That means 4 lakh is supposed to be recognized every year. 4 lakh is the lease rentals. We are supposed to recognize it every year. Even though first year there is zero rentals, that is as per the agreement. Then how do I record? Actually, cash account, say example, you are lessee. What is the cash you have recorded? 0. Got it? What is the cash you have recorded is 0. Next, but what are you supposed to say, sir? Deferred rental income. Deferred rent, you have to take the income of 4 lakh rupees. Same way, even, lessee point of view, I already told. Lessee point of view is what? Irrespective of any lease, ROUA account debit to LO he must have done. This is only from the lessor point of view. So he has to say cash account debit. Correct? Sorry, I'm sorry. Here, this is not the one. Here, deferred rent account. Correct? Deferred rent account debit 4 lakh rupees to rental income. Rental income will be 4 lakh rupees. Okay, rental income will be 4 lakh rupees. Just a second, some important call is coming. Sorry. Yeah. Yeah. So, deferred rent account we are going to use, my dear. 4 lakh deferred rent account, cash account 0, nothing I got, I know it. Rental, rental income is supposed to be 4 lakh. Yeah. Next year also, what are you supposed to do? Again, anyhow, next year you got 4 only. Then we'll say cash account 4 lakh and income account 4 lakh. And the third year you got 8 lakh, right? Third year 8 lakh means cash is equal to 8 lakh. Income will be 4 lakh. Income will be 4 lakh. Deferred rent is going to be next to 4 lakh rupees. Deferred rent account, you are supposed to use it so that your rental income is straight lined. Rental income is straight lined. That's it. So end of the day, see, it is very clear. 3 years asset has to be used. I gave one building to other party. 3 years mandatorily other party has to use it. He may be paying first year 0, next year more or next year less. That is just a finance arrangement.
It is an understanding between, it is just an understanding between the parties. Correct. Na? But asset is being used in the same fashion. Correct. Then why rental income should be 0 in 1 year and 4 lakh in 1 year and 8 lakh in another year? Illogical. That is the only reason we are saying. What are we trying to say? No, asset is used equally in the 3 years. So let's go and buy for, let us book the rental income over which, how many years? All the 3 years equally you are supposed to book it. That is one point. Next, with respect to finance lease. Yeah, if it is finance lease, what are you supposed to do? See, it's very simple. Okay, what is that I say? My asset is gone. Correct. My asset is gone means what do I say? To asset, I will say, or it may be my business. That's why I'll say sales. Correct. And what is the debit, sir? Debit is going to be receivable from the receivable. What is receivable over the period? Correct. Total amount receivable. E total amount receivable, we call it as net investment in lease is the word we use. Right. Generally, this is very small thing, but some students are getting confused with bit. I'll tell you what is it. See, what is he supposed to, what are we supposed to receive in 1, 2, 3, 4 years? This is in future cash flows. Yeah, if I say future cash flow, some number, if I total it, okay, then what do you do generally? Present value factor also I'll apply. Then I will get present value cash flows. Correct? Right. Listen. E total is called, simple words mein, for your understanding, this is called gross investment. And E total is called net investment. Getting my point? E gross investment at after multiplying with present value factor, what you get is net investment. E difference between these two columns is nothing but unearned finance income. Unearned finance income. This will be treated as unearned finance income. Okay, unearned finance income. Right. So here, E fourth may, what all will be included in this, sir? What all will be included? MLP, I said. Here MLP, that is lease payments basically, plus residual value of the asset. Residual value of the asset, if asset is going to come back to the lessee. Correct. Now, just imagine, I gave 4 years lease to one car to one person. Right. I am de-recognizing my entire asset. I am saying my asset gone, full amount. Asset is, a car is bought for 10 lakh. I'm taking it out from my books 10 lakh. Got it? Then full asset is gone means what do you get from the other party? Receivable, I will say. E-receivable can be in cash, E-receivable can be in kind. How can it be kind? Assume, as per the agreement, after 4 years, the party has to give me a used car. Correct? 4 years used car, old car, I am going to get it. That means I have right to receive. What do I have right to receive? I have right to receive 4 years used car. Correct. Now 4 years used car means 4 years used car will have some value, right? That is called residual value. A residual value, when I say residual value is equal to, you can call it as GRV plus UGRV together. So what all I have right? I have foregone asset, but I have got right. Right to receive what? Right to receive 1, 2, 3, 4 years car lease payments. Plus at the end of the 4 years, I will get the car also back. Our car residual value also supposed to be considered. That all included in 1, 2, 3, 4 years. Yeah, without discounting, numbers are called gross investment. After discounting, numbers are called net investment. Okay, difference is obviously going to be unearned finance income. Yes, we are lesser, so it is an interest income to me. That is how we'll do it. Right. Just a second. Yeah, sir, Prashant sir. Hello, Prashant sir. That's what I mean. Students, due to some,
Yeah, two sessions, very excellently given explanation. students are benefited. Today also what happened is we have some allocations NCA classes.
Okay.
The login time was a bit changed, so that is might be the small reason. My voice is audible somehow.
No, it's breaking actually. I mean,
Here the weather is also very slow now. So maybe very nice and excellent. I request our to propose the vote of thanks for the two-day sessions. Just a minute, sir, we can,
second, I mean,
Santosh Pawan, are you able to hear my voice? Okay.
Respected Sikasa Chairman, CA Prashant Kumar Sir, today's session speaker, CA Miriyala, and all our student friends, a very good evening to all. I am conveying from heartful gratitude on behalf of me, on behalf of Sikasa Vishakhapatnam branch, to the speaker of this session, CA Miriyala, for accepting our invitation to be with us and to share his thoughts regarding Indian accounting standards. And I hope students got benefited to this seminar. I also extend my thanks to Chairman of Sikasa and Chairman of Vishakhapatnam branch for arranging the webinar for the benefit of students. I also extend my thanks to all the students for joining and getting benefited from this webinar. Thank you one and all. Sikasa committee is looking forward to organize more seminars in the upcoming days. Sikasa committee shall be with the students to solve the academic issues. Students can contact us at sikasavskp@gmail.com and also the social media groups for any queries or issues. Thank you, everyone.